I think we are now live. So first of all, as a quick introduction, I'm Thomas Cresswell. I'm the Chief Business Officer here at Melton Marble. We are using precision fermentation to develop the next generation of fat and oil. And I come from more of a commercial background, having started my career in strategy consulting. I then joined Cargill in their corporate strategy team some years ago, and maybe about 3.5 years ago, helped to build out their new venture capital arm, where we were actively investing or diligencing a lot of precision fermentation companies. And given the insights that I had at the time, I then decided to personally invest the next stage of my career by joining one of these precision fermentation companies. So I am delighted to be joined today by two people who I admire a lot within the industry, and people that I would consider good friends. So I think we should just jump straight in, and maybe it would be great, first of all, if my panelists could just quickly give a quick introduction to who you are, your background, and how you ended up investing in food tech, climate tech, and precision fermentation. And perhaps the angle to take is, when you started to look at this space, what was your initial investment thesis at the time? So maybe Beatrice, we will start with you.
Sure. Hi, everyone. I'm Beatrice Franco, Managing Partner at Vita Vera Ventures. We invest in early stage food tech companies from the digital side, software, all the way to deep tech. So we look at precision fermentation a lot, actually. I started my career as a corporate lawyer. I worked in IPOs, venture deals, capital markets in general. I did that for almost 10 years. I then moved into banking. I also at JP Morgan. I also did that for almost 10 years. I then started my startup career after that, first as an investor and then as an operator. I was an agricultural tech company doing sustainable fertilizer. So at that time is when I really understood the impact of food in climate. And that's when I decided that's what I wanted to do. And I've been investing in climate tech with a food lens and materials lens ever since.
Perfect. Great. Maybe Kaio, same question to you.
Thanks, man. So it's a pleasure to meet you all and be here. It's great to see you, Tom, and Beatrice too. So my career has this different early stage from Beatrice. I started in private equity, always food and agriculture. Worked in private equity for close to 8 years in different areas across the value chain. Went to work for Cargill for a few years in Singapore, and then in the US. That's where Tom and I started to work together for the first time. And went back to private equity, and then started my startup career as well. Currently, there are two businesses that I'm very closely related to, plus a stealth business, let's call it. One of them is I head strategy and business development for Orbillion Bio, which is a cultivated meat company focused on producing cultivated beef from the Bay Area. The second business is I own a consulting business where we advise and invest in a multitude of companies across the value chain for food and ag. And I also have my own portfolio of advisory and personal investments, many of which are in the fermentation space. So it's really great to be here.
Perfect. Great that you're with us, and it's also great to see you. So now that you both have been investing or looking into the world of precision fermentation for the last few years, it'd be great just to understand over that time, perhaps, how your investment thesis has evolved. And for the audience who are joining us here today from different perspectives, what maybe lessons or key insights could you share with them that would be interesting to know? And again, maybe Beatrice, it would be great to kick off with you.
Sure. I think to start with a very simplistic view of precision fermentation, I've always been very bullish since I started hearing about it, because it just sounded like an easier way to get to the target product, closer to what you really wanted if you compare to plant-based, but also not having the same technical challenges of cultivated cells would have. So it just sounded like the perfect mix. So I think a lot of my interest started because of that. As precision fermentations companies started coming to market for fundraising, and you start seeing a lot of them, what we actually changed, I wouldn't say we changed the thesis, but we started looking at it much earlier, is the scalability plan of every company, because you are competing for talent, you are competing for equipment, you are competing for inputs. So I guess no matter how early the company is right now, the pre-seed or even an angel situation, like we look at what is the plan around that. Are you front loading cost analysis? Are you thinking about the resiliency of the supply chain of your inputs? Like, you want to see that plan very, very early on. And that's something we've been doing more and more.
Amazing. Some great insights there. And from your side, Kaya, what have you learned, and how, could you share some insights with the audience on that perspective?
Yeah, of course. I feel like, I agree with everything that Beatrice said, so I'm not going to repeat any of what she said. We share the same learnings. The learning that I found was the most valuable had to do with the requirement for understanding what the market is and what is the fit for your product, what you're competing against. To be just very honest, I have the impression that a large percentage, not the majority, but a large percentage of the companies that are bringing solutions into fermentation have a massive disconnect with what the industry is. So I'll give one example. I think that precision fermentation for lactoferrin could be a viable business model. It's a real problem. The majority of dairy companies around the world have tried lactoferrin and failed because the yields are too low, so they can't make it work. But they have incredible businesses that are very, very efficient on the more commodity side. When you go to the startup world, there are a number of startups that are going into, and investors also, that are pushing for the commodity products. But in the beginning, it is insane to imagine that startups will be competitive. And so I just don't believe that that's a viable model. So that was the main learning. I think the learning is startups will not compete in the mass market starting on day one. And unless you're willing to fund that through a long life cycle, which is typically not associated with the life cycle of the fund, you should go for more premium products. And so I find that the more successful companies are those that are developing very, very specific solutions for today inefficiently served markets. So I think that that's kind of like the one big takeaway that I got from these years.
Very useful insights. And I think one thing just to build on that, given the perspective that I first of all had as an investor, but then now really being on the inside, and I think you both touched upon it in a high level way, is that really having that understanding of the techno-economics of your business, of your underlying process, and how that then relates to the market, as Kayo just indicated, because different precision fermentation platforms ultimately will have different underlying techno-economics. And depending on what that really looks like, and what cost of production you can really realistically expect to achieve, of course, it will really lead you to understand whether or not there is a viable business case there in the first place. And I think maybe just to dive a bit deeper there, because I think all three of us come from more of a commercially focused background, which means when looking or diligencing some of these companies, it can be quite hard or even frightening to really understand, how do you build an accurate techno-economic model? How do you build an accurate perspective on what the real cost of production will be, and really understand their unique technology and whether or not there is real differentiation there? So maybe good just to dive deep and ask Beatrice. So when you're looking at a company in this space, given that you're from more of a, let's say, commercial background, how do you look at the technical side of this equation, and how could our audience learn from your approach there?
Sure. So I think for the very start of the conversations, once you've seen so many companies in the space, you start to know what questions to ask and to see some certain patterns, and just get a sense, high level, does this make sense? Does this not make sense, right? But once you get more into further diligence, it's really important and really helpful to have a technical expert with you. And some funds have it in-house. We have a great advisor, for example, that helps us a lot. Some people have full-time PhDs in the fund, and sometimes they use consultants. There's no right or wrong way of doing that. And obviously, if you're not the lead investor on a deal, talking to the lead investor who definitely did thorough due diligence, technical due diligence, is also very helpful. So I think there are many ways to go about it, but I also think that unfortunately, you can't have that person with you in every conversation, every call. So there's a lot that you have to learn from the commercial side as well to at least identify where a potential risk could be, and then point, these are the things I'd like to check further into with your technical advisor. And especially if there's anything unique and novel about that one company you're talking to they've never seen before, then definitely focus on that.
Great insights. Caio, I saw you unmuted there.
Yeah. I don't want to repeat anything that Beatrice said. We take the exact same approach. The one thing I would add is more and more we've seen multiple companies come out and the founders or some of the key C-level teams are not from the industry or have never done that particular piece of the technology. And I think that you should steer away from those companies. I think food and ag is not software, and it's not something that a 17-year-old kid can go and code on the weekend. And it's just something that you have to have the stomach and the patience and the knowledge. And the knowledge comes from years and years and years of doing it again and again and again. Scientific breakthroughs are actually very similar. For you to achieve scientific breakthroughs, you need to understand the science of it, which means you have to have experience in it. And so the only thing I'd add is outside of a thorough due diligence with an outside provider, make sure you have a team that is experienced, has done some of it before, and has a team that has also done some of it before, at least tangential if it's an entirely new area. But I would, again, steer away from companies that have founders that have never even set foot on that particular area for food and ag.
Great addition there. And maybe then just to dive one level deeper on the same subject, then imagine you've been in situations where you've been diligencing a particular company and looking at all of the angles, both on the commercial and the technical side. Have you ever had situations where maybe the technical experts or experts that you've been working with had an opinion on a particular company which didn't quite match up to maybe the commercial perspective you had on a business? And how did you reconcile the difference there? And yeah, maybe Beatrice, over to you.
Sure. I like this question a lot because I think it's really funny how, by definition, this tension needs to exist to get a good result. So on the one hand, you have the technical expert whose job is to point every single risk, right? Even if the probability is very low, and to be very precise. And on the other hand, you have the commercial side that wants to see the vision. Where can this company get to? What will be the results if everything goes well? So there's always that tension, and you want that tension to be there. When I was an operator, as a CEO, I had to deal with that internally as well. So the companies deal with that. You have your commercial team wanting to, shout out all the good things that your company is doing. You have your technical team saying, wait, we haven't tried 100 times in 100 different environments yet. So it the truth is in the balance, right? So you want that tension to exist. You want to look at every risk and then decide if they are that important or not, or worth taking the risk, if the vision is big enough, if the founding team is extremely knowledgeable and you trust them to take the company to the next level. So you want that tension, and you want to consider everything before you make a decision.
Yeah, great perspective there. And Caio, anything to add or build on there?
I would say that before starting any process, you have to make sure you understand what is really important to you. If I'm investing in a pre-seed, or in some cases even a seed company, I couldn't care less about the patents, for example, or the patents the company has submitted or filed for, because it's so early that the technology will change and the patents will probably be worthless. And there is a vast number of patents out there that have been filed just to show investors, hey, I filed a patent, and they'll be too broad, and people will never allow them to go. So I think that I like what Beatrice was saying about the tension, because you need to understand, like, what are you really looking for, and you have to have teams that technical teams that also understand that, and so it's a matter of sitting down again and understanding what is the for this business, what is key. Is it completely new? If it's completely new, patents are probably not worth it, unless it's a patent you're bringing from a different industry, in which case then there might be application and value. So it's a tailor-made strategy. You can't build a one-size-fits-all strategy that you apply. I've seen many cases where the technical recommendation has been to either move forward or not, but the commercial applications just are there or aren't there. There have been cases where I've been presented with the technology, and the technology is amazing, and then the entrepreneur lists the 5 problems they're solving for the industry, and then my reaction is, I've actually worked for this industry for 5 years. None of those problems are real problems. And so technology is there, but you're not solving anything. So you have to have the balance, and you have to really be honest about what is really worthwhile for this particular deal.
Very interesting insights there. And just conscious of the audience that we have today and thinking about who would be really looking at this as an opportunity for partnership or investment. And I'm aware there might be a lot of corporate attendees here today who are looking to enter the space, whether through partnerships or through other means. And Kyle, be interested to hear, especially given your background from Cargill, but also now that you've been advising startups for the past years, how would you advise corporates or other strategics who are looking to enter this space in partnering with them? Because it's not only about making investment, it's really creating more strategic value for the mothership. And how do you look at that picture?
I think that companies need to understand that partnering with a startup is not an acquisition. So you have many corporates whose initial gut reaction is, oh my God, I need exclusivity. I need unique access to this. I need A, B, and C, as if you were buying a few $100 million company. So it just won't happen. And if it does happen, you're destroying value for both yourself and the entrepreneur. I think you need to have a flexible approach where you're friendly to the entrepreneur to the point where it allows them to operate, develop the technology, and they have the right incentives to do it. But on the other hand, you want to make sure that you're close enough and you have your team also contributing, so that you can understand when the right moment is to go and grab that technology for yourself. Because ultimately, that's what you want to do. I don't think Cargill would get involved with a startup because they're really thrilled about the idea of sharing the technology. It's ludicrous. It's just very naive. So you have to be close enough, and so you have to have the processes to understand information coming in from the startup and from the projects you're doing with them, but without constraining or removing the incentive for the startup to innovate. And I particularly believe that in the majority of cases, corporates should consider putting equity in, because number one, it aligns the team. And so the actual team at the corporate will feel much more incentive to make that startup work. Number two, it's honestly not a heavy burden. A company like Cargill generates $5 billion of cash every year. And if you invest $1 million, it's really not a burden. They waste money with a lot of other things. And I think that kind of like goes for the majority of other corporates as well.
Yeah, really great perspectives there. And I think maybe just one thing to build on from my perspective, more so on the Cargill venture side, and really every deal that we would look at, we would always very upfront have to very clearly articulate what is the strategic rationale for this deal. And it might not always be clear that this is a pathway to a full M&A transaction at the beginning, but there will be other strategic value adds that you can get out of making such an investment early on. And with that being said, of course, when you're considering a strategic rationale, and depending on what type of company you're coming from, whether you're in a very basic form looking at some type of even feedstock supply agreement to one of these fermentation companies, or whether it's more comprehensive where the ingredients that these companies are making can be very strategically important for you to really unlock value in your other businesses. I think having that very crisp understanding of what the strategic rationale is upfront really helps to make the case whether or not investment is required upfront, but then how the partnership should be structured and how it can evolve. So just conscious of time, we're getting close to the point where we should be opening up to the audience Q&A, but maybe just one final question. So given the experiences you've had in this space, are there any other closing pieces of advice or things that you think would be useful for our audience to understand when looking at the world of precision fermentation? And yeah, maybe Beatrice, you could comment there.
Sure. I think I'll just double down on the plan. I think much like you ask for projections in very early stage companies and they're always wrong, but you still want to see them because that shows you the assumptions behind it. It shows you how the entrepreneur is thinking about moving along their development. You want to see the same thing with the scale. Like you want to see, and with the cost cutting and optimization, you want to see all of that, the plan in advance. Chances are it's going to be wrong as well, just like projections, because it's way too early. But you see the thought process and you see that they're already thinking, oh, I'm going to need a third party for this. Like we saw in the presentation today, how many partnerships you need. Are you thinking about all of them? Have you started talking to them, right? So you see if they're just really focused on one piece and forgetting the entire company, or if they're really thinking about everything they're going to need and anticipating the steps they need to be taking right now. Whether that changes or not later doesn't matter, but they are prepared for that.
Great perspective. Kaio, any closing thoughts or closing insights that you would like to share?
I'll be very short. I'll say we're in many cases, and this is one of them, in some ways reinventing the technology. And so you need people who are obviously incredibly smart and like you said, from the industry, blah, blah, blah. However, we're not reinventing how we sell it. How we sell it is pretty much the same way we've been selling the exact same product. It's just built differently. And the consumer doesn't care. And so you go to the groceries because you want to buy tomatoes. If tomatoes are produced differently, you're not going to go elsewhere. You're going to still want to go to the grocery store. I would, like Beatrice said, look at the plan and also look at the commercialization strategy. How do you plan on bringing the product to market so that you're just not building technology and which is going to get lost in limbo and without the proper experience to take it forward?
Great perspectives. And I see just on time, Ruben has joined us.
Yes, I'll join you back. And thanks so much for sharing your perspectives, all three of you. I think this has been a great and insightful conversation. And by now, I would also, again, like to iterate to the audience to please let us know your questions to the panelists in the comments. And I'll make sure to ask your questions. So please, any topics, you can put them in the chat box. But the conversation so far has been a very technical one, and I really liked it. Lots of good insights about the founder team and about tension between the technical team and the commercial team. Maybe one more personal one, as I think many of you are more often in the US than I am, and that is a market where these products for now are more for sale. I'm very curious to hear, have you tasted any products that were made with precision fermentation ingredients, and what did you think of them? Who wants to start?
I'm happy to kick us off because, I mean, I work for a precision fermentation company and have tasted our fats on many occasions. And without trying to sell it too much, they taste delicious and even better when they're in a real application. And I think, of course, with the fats that we're producing, we're really targeting creating animal-like fats. And our first product, which is what we would call a beef-like fat, really delivers on the mouthfeel and juiciness and taste experience that you would get from a real beef fat. So that would be one. I've also tried several of the precision fermentation companies producing whey protein. Their products in some some applications. I would say, personally, it's quite hard to see the real value they've created in the end application, especially given such low inclusion rates. But I think interesting nonetheless. I don't know if the other panelists have any additions to add.
Yeah, just to add on the whey protein, I was at Expo West earlier this year, and I tried quite a few different things. It is interesting to see the precision fermentation milk next to a plant-based, and how different that is. And I don't mean oat, I mean the ones that are trying to be exactly like milk. You really see the difference. It's like tasting milk versus tasting something else. Good or bad, up to, it's subjective. People have different tastes and they prefer different things, but it is that confirmation that with precision fermentation you can actually get to the real taste and the real texture, the real deal, right? So that was interesting to compare.
Yeah, I think Tom did a terrible job of not selling. But no, just kidding. Well, I actually go in this exact same direction. I tasted several of the precision fermentation products in different categories, and there are some that are, I think, really plant-based because the inclusion rates are just very, very low. I haven't tried the ones you're mentioning, Beatrice, so I cannot opine on that. On the ones that I have, the inclusion rates are like 1 or 2%, which I think from a food science perspective is not really enough to change the substantially the taste at all. But you have others where you can sense some, and so you see functionality in precision fermentation cheeses. You see functionality in a few other areas. When you think of a lactoferrin-based product, for example, I don't think you taste it, but rather it would be the nutritional value of it. And so if the nutritional panels are the same, I'm pretty happy as well. So I think there's still ways to go. And again, it depends on the sector, but there's some pretty good products out there.
Thank you all for this sneak peek into those product futures. And we've got one question from Nathan Pomier. I hope I pronounced your name correctly, Nathan. It's for Caio and Beatrice, and a great question from an investment perspective. If you look at the different steps in the value chain of precision fermentation, at what stage do you think investment can be most effective?
Do you want to start, Caio? Should I go? Well, I mean, assuming we're talking about venture capital investment, because it changes, right? I think when you're talking about venture capital, I think the early stages are the ones that make the most impact, because you actually go from almost a zero to a company. And people need to believe you with not a lot to show. Once you start having revenues or partnerships or purchase orders, or when you get to that point, then you're at a different type of investment, which is also very impactful, but it's completely different. You don't need to, you can get debt based on your revenues. You can get, you can even do project finance to build plants. So it completely changed. It completely changed, and you're like you're a real company. You can see your future. You have real projections, and you have past financials, right? Venture capital has, which is the most important thing, I think, is the most impactful, is they come to you when you're still an idea and when you're still in the lab. So to me, and I'm biased, obviously, I think the most impactful is the venture capital.
I think there's a combination of two. And the first one is exactly where Beatrice is, because you're investing in building that first idea where no one else will give you capital. The next stage of growth capital, Series A, B, and C, I think that whoever takes venture capital money to invest in assets it's a terrible idea. I'll just stop there. You should 100% look for alternative sources of funding, and there are today many funders who are who currently serve biotech, and they're looking at food tech as a market opportunity, because many of the precision fermentation and other biotech companies are going to have to build their own asset base and equipment base. So you should look at that. I would also look at corporate and venture funding for A, B, and C, but not to finance assets. Again, I think that's a terrible idea. It inflates valuations, and it generates the distortions and bubbles that we're seeing today, and it will never return you the money back. So I advise against that. But to finance working capital, team, and R&D, which are high returning investments. So again, I would try to do like what we call blended finance structure, where the Series A, B, and C companies look for non-dilutive financing for CapEx and equipment, and for VC and corporate money for team, R&D, and working capital.
Yeah. And maybe just quickly to add, because I think in the question, if I did hear correctly, there was some reference to the actual stages within the value chain within precision fermentation. And I think, as Kaya mentioned there, I think looking at the stages of precision fermentation, typically the value chain very upstream will include, let's say, your feedstock. You then have your strain engineering, strain development. You then have your biomanufacturing, then downstream commercialization, application development, etc. And I think, of course, different companies will take different approaches to where in that value chain they want to play. But of course, from an investment perspective, where you're investing, the types of capital that are most relevant are also different, as Kaya mentioned. And I think, what you see today, mostly in the world of precision fermentation, are companies whose core competence is really in that strain engineering and strain development piece, where they've developed a microorganism which is really good at producing a specific ingredient. I think what I find interesting now is that you're seeing some companies now who are really innovating on the feedstock and trying to use some waste streams to figure out how to produce some type of sugar to go into the value chain, and leveraging waste streams that exist to make the whole process even more efficient than it already is. So yeah, just wanted to add that.
Thanks for that addition, Thomas. And I think there's another question in the chat, and Kayo, you already touched on it maybe a little bit, but the question is, who will finance the scale-up? And there's a note about that banks will be nervous whether the product will succeed in the market. And so what will be the source of finance?
Yeah, it's not the banks. Majority of banks are, like you said, scared, and they don't have the internal infrastructure to finance startups. They just don't. You have multiple leasing companies that currently work in biotech, and their expertise is financing bioreactors and other types of equipment for biotech companies. That's all they do. Individual leasing companies can lease for Series A and Series B, even up to $35 million for a single company. It depends on how much you raise, because there's part of it which is connected to your equity raise, how much capital you have in the bank, things like that. But you can get a 9 to 15 million financing from a single source at your Series A raise. So I would 100% go to those routes. They're very hungry. They're very market driven. So they're not venture debt. It's not massively expensive. They don't convert it into equity for your business. And they have terms which seem pretty entrepreneur friendly. So I would definitely recommend going after those leasing companies, equipment leasing companies.
Thanks. I think we have time for 2 more questions. So just also for the audience to announce that there's maybe, if there's any burning questions, please let us know now. The one question I now see still from Nicholas is a bit about the end markets for precision fermentation ingredients. And how do you see the future for different categories such as commodity food proteins or more specialist materials? Beatrice, you want to take it?
Yeah, I think I touched upon this a little bit earlier. If you are focusing on high value products, that goes for cultivated cells as well, right? You're going to reach price parity earlier. You're going to get, product market fit earlier. You should, it's ideal if you are focusing on those. We invested, for example, in a company that is focusing on a breast milk protein for infant formula. It's like your scale doesn't have, and the amount of that protein that goes into the infant formula is very small. So you don't need a commercial scale of, I don't know, 500,000. Like it's a completely different scale that you can be a price parity. So you can maybe think of 50K, liters instead of 500K liters. So ideally, you are in that world of high value products. I'm not completely sure. I wouldn't say that if you're not, that's a bad thing and that is not possible. It's just going to take longer, and you just need to find more solutions to optimization, to efficiency, downstream and upstream. So it's just a longer process. And as Kyle mentioned earlier, some funds might not be set up for that, because depending on where they are in their deployment phase, they might only have 5 years left, 6 years left. So that's the kind of thing, when you're fundraising, you might hear from different funds like, it doesn't fit me right now because it's just going to take longer. And obviously, if you're talking about a product that has much higher value, it'll be easier for you to fundraise.
Yeah, I completely agree, 100%. I mean, if you have a really good solution for infant nutrition, for example, there's no reason why you should just lower the price just for the sake of lowering the price. I think you should capture the market opportunity. And if you're lactoferrin, for example, if you're producing a really good product, if you're producing HMOs, also same thing. If you're producing a really good product, produce a really good product, sell at market rates, and then as the technology scale with time, you could, and that's a commercial decision, lower your prices. I think, more skeptical of the commodities. I think that the line of sight to profitability is so far that I wouldn't even try it. I mean, at least if I would first get a business going on a higher value product, get cash flows, and then with those cash flows, I would go with projects that would aim to the commodity. And then the last thing I'd add there is, I think we've created this thing of people who say, I want to dominate the world. Who's going to win in the food industry? Anybody in the food industry knows this. Everybody. Only people who are not from the food industry think like this. There are no winners. Cargill is one of the biggest companies in the world. They might own 5% of a given market. There are no winners. There are multiple winners and multiple players. So this idea you have to provide the entire world with products is just not existent. It's not there. The supply chain is not set up for that. So I would question the thought that you need to go commodity, but rather find a great business opportunity, just like Beatrice is saying, and just follow through on that strategy without the need to scale and sell billions of pounds on day one. It's just not going to happen.
Yeah, if I may just jump in and add one reflection, and I think it builds on another question in the audience by Korhan around what defines a commodity. And I think that's also important to look at, because different ingredients also have a different spectrum about what is commodity versus what is more specialty. And I think in the world of fats and oils, to give you one example, I think we've chosen specifically to go for what we consider to be slightly higher value fats and oils, which are, in our view, almost specialty, semi-specialty fats, which really deliver more on functionality and flavor. But still, we're expecting in the long run a cost of production of less than $5 per kilogram, which is still very low in the broader context of things. But comparing that to a protein where, of course, the output that you get from a precision fermentation process will likely be much smaller in terms of volume, means you do need to go more high up on the price range. And I think that's why you always need to link it to the underlying techno-economics of what it is you're playing in, what ingredient you're working with, what is your platform, and looking at it from that perspective. And that's why we're not targeting to go immediately to palm oil, for example, where we're competing in a market where we need to be less than $1 per kilo. So I would agree with everything that you've said.
Excellent reflections. And that also brings us to the end of this panel. So I want to say a big thanks to the three of you. And also thanks to the audience for providing many interesting and thought-provoking questions to discuss. And more actually are coming still into the comments. And as was said before by Flora as well, this event was just as much as it is about learning as it is about connecting with people. So please do make sure to use the Hopin platform to send a direct message either to the speakers or to the authors or to other people that are present here. And for now, we will take this conversation further in a short networking. So if you go back to the events landing page, everybody can join short 5-minute randomized networking to continue the conversation. But big thanks again, and I wish you all three a great day.
Thank you, everybody.
Thank you.